CTM. What's going on, everyone, on this Tuesday, on this Taco Tuesday, summer session, CTM. Big shout out to everyone here live. Big shout out to everyone watching this on the replay. This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. We're going to be taking a look today at a little bit more, let's say, cycle theory. We're going to look at it in relation to Bitcoin and gold. And then we're going to look at it in relation to Ethereum and QT. So we got a lot to talk about in order to figure out and make sure that we have our awareness about us. We have lots of, let's say, expectations. We have lots of situational awareness. We understand where we believe we currently are right now, what we're looking to transpire over the next year, 2, and even 3. It doesn't mean that if, when presented with new evidence, that we won't change our mind and do it as quickly as possible. As quickly as possible, we are trying to make sure that we stay on the right side across markets. And why we do that, we make sure, above all, most importantly, that we make sure that our mechanical systematic edge is what we are paying the most attention to. Let's take a look at right now, and we'll go over positionings to start this session off, because we're going to get into it today. Ethereum, its newest position, continuing to run here. Someone mentioned that Ethereum is currently roaring in the bliss, getting ready to break. Is it getting ready? That's a little presumptuous. It looks like it has a date with $4,800, $4,800, new all-time high. You can see that Ethereum here is tracking, looking really good on the breakout, is extending, and it is hot right now. Again, you know what? I started looking today at Ethereum dominance, and that's what led me to look at in relation to quantitative tightening. That was made me look at what happened last cycle. It's another clue about whether or not we're seeing a lot of similarities, or indeed we are seeing something different. All right, let's just go ahead, and we see that Bitcoin bull run's continuing to hold as well, extending its position out over here, 20% currently into profit. See that NVIDIA continues to hold, 27% into profit. Tesla's new position here, as of yesterday, still holding on, barely in the green. We're looking at TQQQ, 41% unrealized gains. 28% is the average winning trade. Right now, we are currently above the average trade. Love to see it. And IBIT right now looking at 2.7% into profit. And that is our current positioning here at CTM. Let's just take a quick look over here, and we see that FNGU right now is looking at entering long pending. If we close on the day, we will have with enter long pending, it'll be confirmed. Entry will be tomorrow morning. Could the rally that doesn't stop continue? I think that's the question that we need to be asking ourselves. Could the rally that just won't quit continue? Obviously, everyone's talking about today's CPI year over year coming in 2.7%. Everything else coming in expectations. And right now, everyone must be asking themselves, is it like, here's a headline. You ready? This is going to go off the headline here. There continues to be no evidence of tariff-induced inflation. And I think everyone needs to be asking themselves right now, is it possible? How is it possible that President Trump has been right about the tariffs and the effect of inflation, and Federal Reserve Chairman Powell, the academic himself, has not? I mean, how many people are employed by the Federal Reserve? How many analysts do they have running models? Powell talks about it all the time. How is it possible? Powell must be right. It must be showing up later. In the months ahead, it must show up, because there's no way that the chairman could be wrong again. I don't believe it. We're going to have to continue watching, and we'll find out whether or not eventually Powell is right. The markets are liking today's data. And we see that, let me just go ahead and refresh over here. We're seeing right now that they are pricing in strongly a cut. Now, Thursday, we have core PPI data. We have unemployment claims. We have retail sales on Friday. We still have lots of data, and it doesn't stop there. Move forward until September. September 5th is going to be non-farm payrolls. That's going to be a big one. That whole week will be obviously jobs numbers, data, and then we look ahead, and then we have ahead of the Federal Reserve meeting, we will once again have, I'm looking for it, maybe a week before. There you go. On September the 11th, we will get further inflation data on the 10th and 11th of that week. So will expectations change and or adjust for a Fed cut coming into September or get locked in? That's what we're watching. Now, don't forget, and I'm just going to remind you all, we continue to watch what transpires with the data, and it continues to be a concern whether or not the Fed would be cutting into a recession and or into normalization. The question came up earlier today, and the question came up like, what would happen to Ethereum if we were to enter into a recession? So let's just move quickly from our positioning into QA, and we'll go back and forth over here. And you know what? That's a great question. And a lot of people have been asking, Jordan, your expectations are that this cycle looks a lot different. That this cycle is not about to come to an end within the next 60 days. And Jordan, I'm wondering what would happen if the U.S. entered a recession next year, 2026. What would happen to Bitcoin? Yeah, and I know the question here is what would happen to Ethereum? What might be some potential low end price projections if the U.S. entered into a recession for Ethereum? Did you all see, by the way, the amount of inflows into the Ethereum ETF yesterday? $1 billion. That's a milestone for Ethereum. That right there is indicative of the price action that's taken place. And then I have to go out and point out, oh no, I'm going to stick to the script. Ethereum in a recession, and so I think that it makes a lot of sense right now. I mean, the numbers are always fake. The fake the inflation data doesn't seem to be fake whatsoever. Not only does it not seem to be fake, it does seem to match what our expectations were. Remember, we watch things like closely, two different things. We're watching what true inflation continues to serve up for us over here. And there have been no signs of that rising inflation. Now, we also watch the price of oil very, very closely, because if we begin to see oil break out and begin to rise, by the way, what about bonds in the 10-year on expectations of the Fed going to lock in that September cut? I'm super interested to know how 10-year, 20-year, 30-year react when the Fed does indeed cut. I'm not assuming yet that they're cutting in September. I believe that there's a lot of data ahead of us, that it's variable. It could change. I'm not. There's no certainty to me that the market is pricing in almost certainty, but that doesn't mean that's what's going to happen. And let's see what happens on Thursday. Wait until we get the PPI data and PCE data, and let's see what happens. But what happens if the Fed begins cutting and the 10-year begins rising? 20 and 30, I would give a greater, let's say, probability that they do sell off and continue to sell off. But that's an interesting dynamic that we're going to have to, I guess, just figure out in real time what's happening. I wanted to take a look at what's going on with oil, and oil right now is not showing any signs of inflationary pressure. The opposite, actually, right? And the administration thus far has done a good job on getting oil under control. I have to say that the Biden administration so far has done a fantastic job of being able to, to wind down the Strategic Petroleum Reserve if it's refilled at a lower price. That's one of the promises made, I do believe. I don't know if it was a promise. we've been told that the Strategic Petroleum Reserve will be refilled. Prices are lower right now than when it began being drained. So, you know what? Hat tip over there to Biden and actually making sure that he did keep inflation under control at a crucial time. We were beginning to see over here that inflation was rising once again, price of oil was rising, and this is the area they began to drain the Strategic Petroleum Reserve. Now, he did say, or President Biden had said, that in this area between 72 and in this pocket, they would begin refilling. They never had the opportunity to do that. Maybe they didn't want high oil prices coming into the election or whatever have you. But we're significantly lower now, and I would like to see that refilled. And I suppose the dynamic that's happening or right now, the tension at play is, well, the Trump administration probably doesn't want to put a bid into the oil market because then they have to fight the potential inflationary pressures that brings in there. A tightrope is being walked by multiple players. Boom, 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 boom. Yeah, August. I don't have it up on here. You guys want to give me 1 second so I could pull up? I'm just want to. I had a restart over here, and Treasury auctions, and I just want to see the upcoming auctions that are going on because August is heavy on the issuances. And looking at the dates over here, the 12th, and yeah, I mean they continue raising. What about the TGA? Let me just zoom in over here. And so from the last week of July, they've been able to raise about $150 billion. As they've been raising $150 billion thus far, another $350 billion to go. You can see right here on the calendar. And by the way, this is not just to fund the Treasury general account. They have 1.6 billion to raise in order to fund the government. One third of that, or less than one third of that, was to refill the TGA. So we can't just look at this. This is the goal. They're trying to get it back towards about 800 billion, 850 billion. But they also have, aside from that, 1.2, 1.3 billion dollars that needs to be raised for the U.S. government. So that's a significant amount thus far. We continue to see equity markets, risk assets shrugging it off. And if you come and you look at our seasonalities, it's so funny. I mean, look, it's just I feel bad even saying that. Well, anyway, we were looking at this and we said, you know what? I wouldn't be surprised if by August 14th we are trading at a higher high, which is now happening. And look, this I don't want to start following the seasonalities. Like honestly, I'm just using this as a guide to into the end of September. I would not be surprised if we continue that chop and or some pressure. I would like to see the last few months of the year for price to begin to rise. I would like to see that connection between that 1998 cycle, floating up into the end of the year. That's something that I want to see for an affirmation, a confirmation that things are going according to plan, and that looking out 5 months from now, when really the engine should start to begin to rev, if we continue to head in the right direction. I think 2026 has the opportunity to be wonderful. A lot of people think that 2026 has the opportunity to be recessionary. A lot of people are looking for a bear market in 2026. Of course, it's something that could take place. So by the way, I mean, as a marker, next week, right? And check out the calendar. Could something like, we have on Thursday, we have, let me jump back over here to real time. We have PPI on, I said PCE. We have PPI on Thursday, and going into next week, it's pretty much a light calendar. It's a pretty much light calendar. Is it anyway? I'm going to be looking to see whether or not seasonalities actually continue to provide such a strong indication. I mean, seasonalities and seasonalities, because for the past 100 years, these are the averages during these particular months. There's something to be said for it. So September's a tough one. Anyway, let's just jump back over there. No, you know what? The 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 inverted yield curve has been flashing since forever. One of the one of the indications that Bravo's research, Peter, Game of Trades, gave to see whether or not we are on the path to a soft landing was if you were to see home builders rebounding. That's an interesting data point. I don't know where I am inside the matrix over here. So let me go ahead and find out what I'm looking at. How about we come back to that one? We'll save. We're gonna do Q&A. So we'll save this for Q&A. I'm gonna save this right here for Q&A because I want to come back to it when I get towards the home builders. And we're gonna look at that in a little bit. I'm trying to get this all into the session over here. All right. So let's check this out. The reason I think 2026 recession is unlikely is because once reptilian Powell is gone, we get Trump super dovish Fed head into cut. What happens if they start cutting and we see short-term rates go down and long-term rates go up? I don't know what happens with the 10-year. I think it's a tough one. Last time they cut, we saw 10, 20, and 30-year yield sell off. And maybe people don't want to buy the debt at lower rates. I'm not sure what's going to happen. And then, someone mentioned, well, there's also a bunch of new issuances. There's an over amount of supply that should also, cause yields right here during this brief period between August and September to have pressure on them rising as well. And what happens if that they do get, what happens if the Fed begins cutting and, they're not cutting into a recession, and then you get an uber easy Fed chair next year who actually does play ball and continue that cutting? And then what happens if that sets off like some type of yield crisis, of bond crisis? What happens if that actually causes inflation to begin rising? And I do expect it will. If we are able to generate growth, I think that's going to ultimately lead to higher inflation. And I'm not talking 9.1% or anything remotely close to that, but something like 3.5%. That seems more than reasonable. Maybe even higher. That's just a number thrown out there. I don't think there's anything easy about it. I think there's a lot that we're going to have to be able to maneuver within. I'm going to go back to this ace too for when we get to the discretionary. You said it's in real time. I want to get over there. We got a lot to talk about today. I feel like we're just getting started. And the question that wasn't even, this is great. I'm enjoying being here with you. And if you're new here and you haven't yet hit the like button, please do. One of the first question of the Q&A here, what could potentially happen to Ethereum in a recession? And I began saying what could happen to Bitcoin in a recession as well, and why I don't know whether or not we have a recession next year. Obviously, nor does anyone. Probability is suggesting as of right now, there's a greater chance that we don't than we do. The highest estimate of a recession that anyone has given is somewhere around 28-30%. And why it's possible, I'm not betting on a recession or anything like that. The reason that I gave for this particular cycle, the data point that the high is going to come closer to the 2028 halving rather than the 2024 was because a lot could happen in between, and it could still happen. The next several months are very important to see the direction that this is heading, and at all times we need to keep our awareness about us because you never know. The macro can change rapidly. Assuming ETH is able to break out to its new all-time high, and it's getting close, obviously, and that things continue through the end of the year, looking into 2026. And I don't know when you all think a recession's coming in order to answer this question, but I'm going to assume that most people think that it's happening in 2026. We could use the summer of 2026 as a bit of a marker. And I personally think this solid line that you're looking at is, the safety zone of why it's of course possible price could come down into it and or below it. I think that if you were asking me what my expectations were, I would use that as the best marker for downside that I could give you. And, that's a big correction, 50% from where we are right now. Obviously, if Ethereum is able to continue its ascent, that becomes a much greater drawdown. For example, everyone's like, ETH could do a 50% drawdown easily. It just drew down very recently. You could see off its, this is when Eric Trump is like buy Ethereum. That was a 65% drawdown. I don't see the problem with ETH drawing. But what happens if it hits my expected target? The targets we were looking at yesterday. And let's say that from there into that pocket, that it wicked down into that. I was looking at the close. So I imagine this is probably safer, not the solid line, you know? And, in the summer of 2026, I I I think that would be my max outside of any type of dynamic where like Ethereum stopped functioning or something, something that was really new and different that we would have to incorporate into our analysis, but under quote unquote normal circumstances, I think that if the recession were to be in the summer, and again, we've looked at very carefully what expectations would be for price in a recession. I think a good rule of thumb for Bitcoin is this. If you expect a recession next year, which again, I don't, but if you expect a recession next year and it's so tricky because you all know I can't be any more sincere. You all know how closely I watch the data to see whether or not it's going to be deteriorating. We had some scares obviously last week with the non-farm payroll 2 weeks ago now. Anything could happen. We're going to be there every day to stay in front of it. You all know that, but some people are new and they don't yet. But if you believe that the Nasdaq is going to correct 40% in a recession next year, I would I would believe that a good rule of thumb would be have that same expectation at least for Bitcoin. That Bitcoin would also, as per the last drawdown of April when the Nasdaq corrected 30%, it was in line. I think that's a pretty good rule of thumb, and it doesn't mean that it won't correct more under different circumstances as it has in the past. But I think that's a good baseline to work off of. And I don't know if you think that the Nasdaq's going to correct 40% next year or not, or anything like that. And if at any point in time we see that Nasdaq corrects 40% and Bitcoin corrects less, that will be brilliant. That will be a major milestone as far as Bitcoin becoming a stronger risk asset, right? In relation to the Nasdaq. So obviously we could only have ideas. No one knows what's going to happen, but I think that this pocket over here is a really good. Let's say I don't the odds of it happening or coming that far down. I don't think are very high at all. I think they're very, very, very low. And then where we just came into this pocket above the solid line, that would be a slightly higher probability, and I think that's really good. I would love to see it very, very, very much as well. Speaking of the home builders, because the home builders had come up earlier, brought to my attention this morning, last night. Take a look over here at home construction, and of course the home builders three times. Need some updates. And they like, again, I'm just bringing your attention over here to Bravo's research, and look over here in, so this is November 2021. Obviously, you saw here NASDAQ peak in this area, and why they're under pressure. You could see that obviously things were not going very well for the equity markets for the U.S. until, look over here, when they begin their ascent up. We've had a lot of pressure recently, and they do seem to be rebounding. You could put like a CTM 1.0 trend line on here, and just breaking out right now. That's a hot breakout here. So of course, you know that we're going to be looking and watching where there could potentially be a breakdown. But right now, this looks good, and this is something that Peter over at Bravo's research showed and suggests that if we are going to see any type of resumption of growth, watch the home builders, and they're going to need to reverse their trend, and they're not, and this is happening right now. Now we also look at TXMC Trades, who gave us another clue of watching the job market. And any other time there's been a soft landing in the past, you have seen a strengthening of also the job market. I don't know how that works in today's 2025 and the amount of automation that's taking place. So again, that's a hard one, and there's nothing easy about it. And could anyone imagine a world in the next 2 years where actually there are jobs that are replaced by AI? Because I can imagine that, you know? And so I don't know how that's actually going to fit into this puzzle, but we're just aware of what we need to be aware of, and then we'll try to take it as it comes. All right, let's keep going over here. I think we're on Q&A, and I think that answers the Ethereum question very well. And since we're still talking about, so we got this one over here that was taking a look at. So then we have, are there any indicators we typically use to have a history of being right that is flashing a recession warning? So again, this in the past for sure was the inversion of the yield curve as being a countdown, and in real time, the founder, the inventor of this particular indicator, well, I think he has a track record of being like 9 for 9 and being correct. He's like, yeah, it's broken this time. It's not going to work. And it's hard to say. So is there any real-time indicator? We've been looking at the deterioration of hard data as something to watch for. I think that's a pretty good clue. Yeah, I don't, that's a good one to look into and get a clearer answer. Can we look at Cardano and see what's going on over here? Let me jump over and just bring up Cardano onto the screen. I'm going to just jump over here and take a look at what's going on with Cardano. Let me just jump even to the candles. So we're out of the market here, and we still have the CTM filter keeping us out. This looks to me to be the cleanest and clearest CTM 1.0 trendline break, significantly lower than we are right now. Occurring significantly lower than we are right now. Prices obviously accelerated pretty far since then, up roughly 10%. Yeah. So I trust in the mechanical, but here's the entry down here for sure was over there. Let's look at Cardano from this perspective as it was earlier this morning and just take a quick look at what's going on. And I'm going to zoom out over here. Is this? Dare I say? I'm going to have someone else say it. Ace will let you all know what he believes is happening over here. And, right? Let me just jump in. Wait a minute. This came up in the Discord yesterday, and I didn't have a chance to troubleshoot the difference over here. I hope I get it to an Ace, but there's an open ticket in the Discord to get the clarity on that right there. Um, I have to, so guys, we're all over the place, but I love it because there's so much to talk about. We haven't even really gotten started. For me, you look at the hype cycle on Ethereum, and you see like the massive drawdown during the bear, and I mean, to me, this looks really coiled. And I've been saying that for the last couple of years. This particular liquidity grab, I'll call it in hindsight, but this mega drawdown, it definitely caught me off guard, right? And by the way, how a trend line, a simple line drawn, could just save you. Look at the breakdown right over there. That's over a 50% drawdown after the break. Listen, whether you like it or not, whether it fits your expectations, when you have a technical breakdown, you have to de-risk because you like, acceleration and momentum could wind up just really, really gaining and put you in a bad place otherwise. Um, but looking at this, imagine this is the facing reality of Ethereum. I mean, this is coiled extraordinarily well ever since the cycle top over here, finally getting ready to potentially make a new all-time high. It looks like, the bigger the consolidation, the longer the consolidation, the bigger the boom. There's a lot to be, in my opinion, bullish about on Ethereum. And we're going to look at it in relation to the Fed cycle and why that points to being bullish on Ethereum. But I'm looking at it from the case of this new adoption dynamic taking place. It's no longer retail bidding on Ethereum. You're now seeing, obviously, here a lot of corporates beginning to take positions. You can see over here into the ETFs, $1 billion in one day is a big deal. That's not, there's something happening here. It doesn't seem like hype to me. Now, of course, it's a form of speculation, but it doesn't seem like hype to me. It seems like with good, obviously with good reason. So is this on Cardano a big accumulation cylinder happening? Could very well be. Listen, whether or not we're going to come into a moment of alt hypes, or the alt hype, uh, from my best guesstimate here, if that's going to occur, it's going to occur much later down the cycle, especially versus first Bitcoin over here. As we continue to look at alts versus the US dollar, we're talking about big consolidations over here. Look at that. Is that another cylinder you're seeing? Much like on Cardano, is that a accumulation cylinder as well? Here is the all-time high. You could look at it like this and say, well, here you go. Drawn lines everywhere. But this looks like an inverted cup and handle, breakout, retest, and getting ready here for, or looking for, the next break versus the US dollar. Look at that. It's beautiful right there. And you know what? Sometimes when it gets caught up like this, it might just find the different resistance, another leg up or something like that, closer to the breakout over here, horizontal all-time highs, total 3. Will it launch against the dollar? I mean, I imagine there will come a point in time, and it's going to have its day, and it's going to happen. But right now, true enough, does seem to be more about what's taking place with Ethereum. And again, I mentioned it in real time, like as it was occurring, and I was like a few weeks ago, I was like, pay attention to Ben. Ben is bringing your attention not towards alt season. He's bringing your attention towards Ethereum dominance right now. And he's talking about how likely you're going to see in this particular moment a lot of these alts bleed into Ethereum. I know when I see signal, and that's why I pointed you towards it. Like that is absolutely correct. You have to pay attention, and that's what's been happening. When you look at this chart and you see the last time Ethereum dominance kind of bottomed out, it's a very, famous date, September 2019. The reason that it's a famous date is because this is when the Fed began to, well, they wound down quantitative tightening. What's interesting is that when Ethereum dominance bottomed out over here is the end of April. In May of 2025, the Fed didn't end QT, but they all but ended QT. We looked at the balance sheet together yesterday, and I've pointed out that since June, it's been flat. And this is when they greatly diminished what they go from $40 billion a month down to $5 billion and now down to less than that. So this was a major milestone as far as QT, not completely winding down, but almost. And it's interesting to me to see at this particular moment. This is where you see. Thank you, Ace. This is where you see it's the Fed cycle I point to. And this is where you see Ethereum dominance 2 cycles in a row bottoming out. Right now, I guess what's different about it bottoming out here, let's try to talk about Ethereum in relation to Bitcoin and its 4-year cycle, is this is prior to the halving. It bottomed out last time before the 2020 May halving. And over here, it's bottoming out a year after the halving. So, was it the 4-year cycle of Bitcoin or was it the Fed cycle? You all know that I favor the Fed cycle, and this is something that just puts a check mark in that box about 4-year cycle behavior, which is right, which is wrong, what's happening, and us trying to figure it out together. I think this is another one, and this is gold and Bitcoin. And you could see that we're looking at from when Bitcoin made its all-time high back into November of 2021. And that's where we're aligned from. And if you look right now, gold and Bitcoin are pretty close to having the same return since. And so what's interesting about that, the first thing I wanted to do was then go back to the previous cycle. So I'm here in December 2018 when Bitcoin last peaked. And and by the way, if you go like this, like, let's see, show gold's outperformance. I mean, I guess we got to go to the bottom where Bitcoin bottoms, right? And you can see that, gold up 7%, Bitcoin up 65, 76%. Major outperformance by gold as Bitcoin goes into its bull market. But then since the top, since November 2021 till today, they're both, right even. So my question was, the first thing I ask is what happened in that previous cycle? And I come back to 2017, December 2017, when Bitcoin peaked out, until they once again were even. And notice this is November after the halving. The halving is in May. It's the same year, and this is when they caught up. And I want you to see what happened right after Bitcoin catches up. And again, this is the year of the halving. The halving's in May 2020. You see Bitcoin catch up to gold, and when it catches up, it just absolutely roars and blasts through it. So then I want to look at what's happening this particular cycle. So we'll come back over here, and now I have them lined up together. And so we caught up right now, and people right now are expecting that massive coming momentum of Bitcoin to come into play. And right, like 4-year cycle is expected to end, roughly in September, October. We looked at all the 4-year cycle details for what those expectations are. And what's interesting though about this chart, if you read it correctly, it was actually here. Again, we pointed out that in that previous cycle, it was November of the year of the halving that Bitcoin caught up to gold, which is what happened here. It was November of the year of the halving that Bitcoin caught up to gold, except Bitcoin did not accelerate past gold, right? And is it different because last time that gold went sideways, drawing down, going sideways, chopping down over here. So gold comes off a little bit and Bitcoin goes roaring. What's different this time is this time you're seeing, first of all, Bitcoin catch up. Same exact time, the November after the halving, but this time Bitcoin does not roar past it. And this time gold is continuing to ascend as well. And then we point to and we talk about why this time is different of fiscal dominance being a thing over here, and you have gold and Bitcoin both pointing to that. And this to me, just like we looked at the similarity between Ethereum dominance and in relation to 4-year cycle, that didn't line up. It does line up to the Fed cycle, which is monetary dominance. But over here, we see that gold and Bitcoin are telling a different story. So is the 4-year cycle and all of its attributes lining up, or are we seeing differences? And you all know that I think that we are seeing lots of differences, and I'm just trying to really clarify them from many different ways. We're seeing a Bitcoin pattern, December 20th to November 2021, correlated with November. Yeah. Let's take a look really quick. So two things, and I had it on Q&A, and I wish I didn't. I wish that I had that right then on gold and Bitcoin, and maybe QA at the same time. And I also wanted to bring in, I guess, Ethereum to QT. But either way, I think well explained and very important to point out of the different and changing dynamics that are occurring. Let's pull up a chart of Bitcoin and just take a look at maybe these areas that are being pointed out over here, as far as the DXY is not responding well. I take it to today's CPI and the Fed cutting. I have to check in with the ACE because I'm not sure, and I'm just gonna have to pull up a chart. Yeah, DXYs. This is so hard, Ace. I mean, first of all, great luck with the pink line, right? That you added in, because I know that we wicked above it massively, but we haven't closed above it, which is interesting. And it's been holding as resistance, albeit nothing easy about that wick. So very interesting. And now we're coming into the test of the purple to see what type of dynamic that plays, and whether or not, just trying to learn in real time. So if you look at what happened in November of 2000 and hold on one second, December of 2020. Okay, December 2020, and then the move up when we had the massive blast descent. Well, let's look at it from this perspective first. Let me jump over to here and let's look at what's going on. And this is the area you're talking about. And in this area, you could see that. Let me zoom out. Any other time in every other cycle that we've broken the 0.786 retracement fib. So you do a retracement fib from the price high down to the bear market low. And then when price breaks above it, you can see over here from the candles, instead of looking at what I'm looking at over here on the area candle. But when price breaks above it, that's when you see that accelerated phase. Price breaks above it, retest, a slight hiccup, accelerated phase. Price breaks above it, accelerated phase. Price breaks above it, it's a lot different. It's nowhere close. I mean, 4-year cycle, lining them up. Is this different? Is this the same? Well, from a 4-year cycle perspective, this is not the same. This is a lot different. So if we try to take this away, where price makes the new all-time high, prior to the halving, and we just smooth this out. And then you can see from, in the past, it's been roughly, I just want to get a bar count just so we have an idea. Like from the halving and, 182 days, 262 days, and 63 days. So 180 days is 6 months is the medium, but it's been as far as 266. In this case, you're looking at 210. If I smooth it out, and then this is where price begins its acceleration, but in no other time after that period over here of when it begins its reacceleration, like pretend this didn't happen because of adoption, and pretend this is where price breaks above the 0.786 and then shoots up. In any other time, it's continued shooting up. Here you got a nice, for sure, nice difference. And anyway, this time I don't see similarities though between previous cycles and this one. So I'm not sure what you're seeing that is reminding you of that behavior that you saw in 2020. So let me go ahead and take a look with you like this. So in November 2020, price had just made a new all-time high. And then I just want to make sure I have your dates. You said December. All right. So I'm saying in November 2020, price makes that all-time high, or December it makes that all-time high, and then continues to shoot up. So here we are and trying to make that connection to what was happening in December of 2020, but price is already well above the all-time high. So I'm not I'm trying to actually connect the dots and find some similarities that were happening in December of 2020, but I'm not seeing it. So anyway, look, I'm just trying um to find something. So I guess we would need to see some elevated price action to have any type of resemblance of 2020 in that period. I'm not seeing it right now, honestly. Well, what about Ethereum though? Are we seeing some type of resemblance to behavior that we saw back then? And because you come back over to that area, right? Again, price is right here about to make a new all-time high. So December 2020, that's very similar to where Ethereum is, in that period. I don't think Bitcoin is similar, but Ethereum is very similar in so much as that it is on the verge at the same time to making that new all-time high. And then what followed suit was a massive move up. So let's watch that, right? And they seem to be lined up extremely close to what you're talking about and what you're feeling, right? You're not like, I say feeling because you said, or am I paranoid? Being paranoid is a feeling, right? So I'm saying to what you're instinctively feeling about this push up to happen, and why I don't see the connection on Bitcoin, and I'm gonna have to throw in there that likely because of what's taking place with its adoption. But on Ethereum, it looks very similar, and you're pointing to the same exact moment, December 2020, right before Ethereum made its all-time high, and then continued to leg up. Ethereum was coming down out of the pocket and coming up in a strong move. Looks very similar from that point of view. I'm glad you brought that up. 2016 is very similar in so much as that in 2016 we have, let me just clean this up a tiny bit. The red. There we go. So if you look at like this, the sustainable channel in 2016, it looks very similar to the sustainable channel that we're currently in right now. The only difference is the length, and in the length is a big difference. So like, how do we go from the bottom? So if I go to the bottom over here in January 2015 to where it breaks out, 840 days, that might be pretty close. So we go from the bottom to where we are today, and it's a little longer, about 6 months longer. Not much of a difference, but it hasn't broken out of the channel yet. And we did that to where it broke out of the channel. So that's similar. That's extremely similar, but this is different. Let me bring up one thing that's different and in looking at that together. And just give me 1 second to go with Ed today. It'll be very easy for me to bring this up. And this is what's different. Come back to that very similar 2016 to where we are right now. And the only thing different here is that when the dollar broke down massively, 10% correction on the dollar, we saw that Bitcoin responded, jumping out of that channel, the sustainable channel, and then making a very accelerated ascent. We've seen a very similar situation. I guess I had it a little off of what my expectations were that could happen there, maybe. And it's going to move it back to where it breaks down out of. Dollar came off 10% and Bitcoin hasn't gone anywhere. So that's different, as far as trying to make the relation to 2016. I think they're very similar in so much as that you have that sustainable channel, which led to a massive move, by the way. So that, again, Bitcoin over here trading at $400 was an asset that could be moved by, not too much money. And you get some tech guy out of the valley who wants to take a speculative Bitcoin position back then of 350 million, 500 million. It's moving the price significantly. And you get a small corporate today taking a $500 million position and doesn't even move the needle. It's irrelevant. It's just a retail, right? So it's a much different asset. However, like, guys, do you think it's possible this happens? Do you think that, like, could you imagine a world where you have this sustainable channel, right? And then it led to a massive move up. Could you picture a world where we have this sustainable channel and imagine it keeps going? Imagine it go, how long is it going to go, Jordan? I have no idea. I don't have a crystal ball. I honestly don't. But I could imagine that it continues, through 2016, past the beginning of 2026. Okay. Everyone then is like, oh, lengthening cycles. The 4-year cycle is now dead. And I could picture the sustainable channel still continuing, that long and then further. So let's look at it like this. Let's look at it like this. You ready? Let's look at it like this. The sustainable channel in a world. Could you picture a world where the sustainable channel continues? And then we move towards, the midterms. And let's pretend here together that we continue to see the unlikely happen. And the unlikely is that we continue to see the amazing correlation between 1996, 1997, S&P 500, back-to-back 20% gains. Then we have 20% correction, coming out of the 20% correction, same exact correlation is so high. Before I got this opportunity to see this chart, you all know I've been just making the observation with you all for a while. What happens if that we're able to continue out into 2026? There's not only no recession, but growth is returning. And let's say that bodes very well for the Republicans in the midterms. And then let's say the Republicans get control of the House and the Senate, and then they're able to stop with executive orders and pass laws. And then what happens if they pass the Bitcoin Act? could you picture a world where you see this sustainable channel, which led to poof, a longer sustainable channel that ultimately winds up to breaking to the upside, but with an adoption catalyst that could cause a significant ride? That's what I could envision that. I mean, you not only, I mean, I envision that. Now, if we break out sooner on the upside, that's going to mean that we expect accelerated price behavior, which is going to end sooner than later into a reversion down to the mean. If we see a technical breakdown, that means to us that that's bad news bears. And we're entering into a bigger drawdown, and it's going to take likely longer for us to repair out of it. That's the picture I've been painting in real time for since for we can remember. Well, the thing about the 4-year cycle is really neat in that we have the window coming up. September is really when it should end. We could throw it out to August. Hey, I'm willing to throw it out all the way to the end of the year to give people like as much time as possible. And I'm a generous guy. I'll even give people January, February to, you know, and then there's going to have to come a point in time when people say that's different. That's not for now, if there is if we know like when the 4-year cycle lines up though, and if we have a topping action, well then the performance of August the year after that I don't think that's irrelevant at all. I think that becomes relevant, right? That makes sense. Like the 4-year cycle is not yet ruled out. Not at all. There's a lot of differences. We've there's a lot of differences, but it's not yet ruled out as far as topping X many days past the halving and what have you. You guys know the deal. So if that happens and Bitcoin tops here at 120 and then breaks down, you know, then keep an eye on August. I think that's very important. Um Let me jump over to one more thing that was on top of my mind. Oh, I lost it. So let's go see what's going on with Link, and hopefully it comes back to my mind. I just had something brilliant I wanted to bring up to y'all, and now it's gone. Oof. What's going on with Link? I mean, that looks like, to me, that looks like a lot like total 3. And it looks like there's relative strength here, right? So you remember we were looking at, let me try a couple of things. There's a lot of similarities, a little bit different. First of all, total 3 had, guys, what happened to the flow? No, great session though, for real. Thanks for being here, those that are. I'm not saying goodbye, but thanks for being here, those that are. And I really enjoy doing this with all of you immensely. We looked at earlier in the session of what this looked like, right? And now I'm saying, was that right? Yeah, that was right. And then I'm looking here and I'm saying, well, the breakout was lower on Link than it was total 3. And they give me a date, November 2023 compared to November 2024. That's a year later. So let me look at what happened in 2024 on Link, where you had a second breakout right there, November 2024. You guys see how this is this TA here, guys. This is beautiful. There's a MCAP chart. Send me the link. I know. When it comes to Kramer, I'm just always reminded of when Dr. Michael Berry told us in March 2023, sell. And that same day, Kramer was like, the Nasdaq's going to melt up. One of them was right, one of them was wrong. No, I do think that for sure that there's no way that Kramer could be as wrong as often as he is. There must be some he like it looks like that he's there to generate exit liquidity for sure, but he's not always wrong, you know. Link looking beautiful over here on as Total 3 broke out in November 2003, making its second breakout retest, and it looks like where Total 3 lagging behind a little bit more. It's about 20% off its high, you know, as far as market cap. You got market cap here as well. Good, beautiful. And 23. Let's see how good I'm at math. They're close. It looks good though. I mean, look, this is all you have to worry about if you are a linker, and it's this right here, right? And if that's a technical breakdown. If this sell impulse triggers, that's a breakdown. It looks to me like it's trying and it's getting close here to the a breakout, and we all hope it's a nice breakout. You know, trying to see the January 2018. Here you bring in so we were talking about December 2020, right? And the relationship of Ethereum. So you went from 7. That's a massive move over there. A massive move. So we'd love to see it again. Just a big move. Yeah, I see I'm looking at market cap, but it's the same difference, no? How do it's the same difference or no? It's the same difference. No? Slightly different. Your guys are right. It's still November 18th, the breakout. It's even in relation to 50% off. Looks like it's breaking out again. And then as far as the breakdown, see that? There you go. I think that's good. That's what you have to worry about. Could BCH get a ETF? Everything could get an ETF. It matters how much of the funds flow into them. Hey, BCH got its own chain, right? But there were no funds flowing into it. So it doesn't matter if even Ethereum, upon its launch, Ethereum was not seeing any funds flow into it. And, you know, that's changing now. And you're seeing funds flow into it. So BCH could get its own ETF. And if funds flow into it, it's going to be reflected in the price. But, you know, it's more than just having the ETF. You need to have funds flow into it. Yeah, we know. I mean, we noticed this specifically from. I'm looking, and here we go. Can't find, from our positioning, and so we had with the entry, and it was just a slight profit. We've been on the sidelines since, and Bitcoin here is doing different things. And we could look at Bitcoin, and since that breakout has been able to hit all-time highs. Yeah, relatively right now, compare Bitcoin to MicroStrategy, there's relative weakness going on. How much longer that lasts, obviously nobody knows. Thank God, thank goodness for us having the ability to follow that momentum, to know that when we want to be in and when we want to be out. Yeah, I love being here with all of you. Thank you for that. It is ETH season right now. Again, just a really strong nod and hot tip to Ben 3 weeks ago when I pointed it out, like shifting everyone's focus where it needed to be. And this, it's, you know, likely Ethereum was gonna be eating alts. It's what's happening, you know, and I think it's important. Right? Isn't that funny? I always tell you it's the day after. The day after the 3 days that we come back. It was a good session today. And I wanna keep it there for now. I think we covered a lot of everything I wanted to cover, except for the TA and setups. I wanted to kind of look around with you. So hopefully tomorrow. How did the titling work in the bottom left? Now, not how did my job do as far as keeping us on topic and highlighting at the time, but I think that works. Is that obstructive to have over there, or would it be helpful if I was able to keep up in real time with what section we were talking about it when someone's looking out on the replay or something like that? Um, yeah, let's finish here and look at what's going on. BMNR. Someone's been saying that they are going to. There's nothing I could say about that. I can't. I don't know what to say about that. 2 year TA. Expand upon that thought. Um, I don't know what to say about this honestly right now. It reminded me though of someone mentioning that they want to look at Circle. I want to look at with you. I've been meaning to look at with you. Sorry about that. I'm trying to think about so many things. Someone's been saying they want to use the MicroStrategy template on on Circle or Coin on the 1 hour. I don't know. That's interesting. I wanted to look at Coin with you and do some TA on Coin, but I'm gonna leave that for tomorrow. I'm gonna go ahead and actually just highlight this so that tomorrow, am I gonna remember that? Who's gonna remind me? Hopefully I come back to this tomorrow. Trying to put a color that's gonna really catch my attention. Maybe the red will. Let me take these off, and then we can look at it tomorrow. Everyone, for now, and I don't think this is our chart. Let me find. I want our core weave chart. This must be the core weave chart. Remember, had been staring this up. Here it broke down. It's the first time it broke down. Right over here. Oh, got back above. They've been making legs up, and this right here is the first time it breaks down below it. Right over here. Core weave. No, it's not the chart. But CTM 1.0. And that's wrong. That's late. Right? Black diamond. There you go. There you go. I knew micro MSRT 2 one day on Circle 1R. You have to fill me in what's going on. In the Discord. So if it's working out, just give an update. Tag me into it too. And or that yeah, that is a liquid or was. Now there's obviously funds flowing in. Everyone, let's cut it here. Have a beautiful day. Thanks for being here, CTM. CTM strong. Have a beautiful day. God bless you all, and I'll see you all tomorrow.